Are Bitcoin bonds the future of government funding?
So here's the idea of a Bitbond. Lyman writes for Forbes, quote, Bitbonds are like regular bonds in the sense that the Treasury Department would allocate 90% of the bond to fund the government. So normally, 100% of the bond goes to fund government. You're buying government debt, right? And for that debt, you're paid an interest rate for your opportunity cost, right? But it would then use the remaining 10% of the funds to purchase Bitcoin. So instead of 100% of the bond going to just government and paying interest, 10% of that bond goes into Bitcoin. Upon maturity, investors would receive 100% of the Bitcoin upside up to 4.5% of the total compounded return. So to pause there, uh, not only do they get the government debt, they get the bond, but then they get the upside of what that 10% Bitcoin is, up to 4.5% of the compounded return. After this benchmark is reached, investors will receive 50% of all remaining Bitcoin upside. Meanwhile, the government would keep the other 50% of remaining Bitcoin upside to supply the strategic Bitcoin reserve. So that's fascinating because right now, if you buy bonds, you are guaranteed to lose money over time. People seem to think that bonds are safety and treasuries are safety. Not with inflation, not with the, destruction of the purchasing power of the dollar. So that's a real problem. However, if you just tack on 10% of the bond into Bitcoin, we all know that the massive upside of Bitcoin over the long term is going to far outpace inflation. So with this, it's pretty rad in that they get 100% up to 4.5% of the total compounded return. That's great. And then after that, they get half of the total Bitcoin upside, but then the US government gets half the total upside. So this is like a win-win-win-win for everyone. So that's pretty awesome.
Hey, this is Brett from Moonstream. If you'd like to learn more about our pro trading signals or our live classes every Wednesday or our Retire Rich program, go over to moonstream.io/start.